Good morning, everyone. Sorry, it's YouTube had a little hiccup this morning. I think we've got it working now. Hey, Jerry, how are you? What's up, Juan Alberto? Mother Truck. Good morning, good morning. How's everyone doing this morning? Hey, Nate. Hey, Raj, how are you? Bakwan, what's going on? Morning, everyone. Okay, happy Friday. Oof, it's been a week, I tell you. Alrighty. So, hey, Johnny. Overnight inventory. We're waiting for overnight inventory to get really nice and short. It's starting to get short. Yesterday we had a P profile, so we had these responsive bids around 66.88, and the market's right there right now. So what we're doing is we're allowing the shorts who got trapped here and underneath yesterday, we're allowing them to cover. So here's what usually happens in the market. Usually what time is it now? 3 in the morning in New York, right? 2:30. So the early bird catches the worm. These shorts will get to cover down here, and then maybe inventory will adjust back up. That's one scenario. If we get any kind of heavy selling, I'm looking for 66.76, just the top of where the cost basis was before we launched up yesterday. So we'll see if that works. Hey, AO, how you doing? I'm ready for the weekend, folks. Definitely. Let's see what happens. We've got a poor high, I do believe. Yeah, we have a poor high with just one tick of excess. So selling competition up here. We have single prints to the downside, which is, this is like a little chunk of supply. So we got to power through that to get back up over 66.91. So let's see. There's where the shorts are. See, the shorts were trapped here. M period couldn't take out the B low. So just under here, that's where we're getting some short covering. Right? So now, if you're thinking, right, I want to be position long, right? Why would you even think of being position long? Well, the only reason is you're seeing bids at the J low. K can't take out J, right? So if you were to jump in, right? Say you jumped in and started buying position here, right? You're putting some bids in. Let me just go show you the balance is 94.5 to 97.5. Once again, courtesy of Renee this morning. She had the levels before I was even up and going. So say you're buying this area and you're building a little position. Now, this is one way people trade. You know, you buy a little position between 85 and 88. You use the bottom of that candle to get out, right? The J low, right? And then as the market, so I bought a couple, I'm long two at 87, 88. And I'll put an offer at 89 and see if I get taken. So I'm sold one at 89, and I'll put the other one at 89 and a quarter and see if I get taken out there. Right? And I'm just scalping this, kind of building a position, kind of scalping, and I'm out at 89 and a quarter. Right? So that's just a quick trade. Why did I see that? Why did I take that long? Because there's so much short covering here yesterday. I anticipated a bunch of buying here. And I'm starting to see it. Why? Because you can see the volume building out, right? Everybody get that? Everybody understand why I took that trade? I was kind of hoping it would sit and go sideways here for a while so I could buy 5 or 10 contracts. But I just clipped two for a couple of points, for like a point and a half, 2 points tops, right? Just to show you that that's why we're getting that upside. We still have supply here between 89 and 90, and that's why it stopped. Now let's see if it comes back down and we can do the same thing again, right? So why do you take the trade? Well, K period cannot take the J low, right? It seems to get there seems to be buy orders under 85 and a half. So if you're buying in this area, but I know that there's inventory above because TradeMaker, she said something quite telling before we started. She said there's lots of inventory above, let's just wait, right? And she's right. So had I taken that trade and we'd gotten there and there'd been a wall, right? You always, as soon as I buy a position, I put my sell orders out, right? Now, look, we went and took out these single prints. So the market actually ran out of supply a lot faster than I thought it would. What does that mean? That means that the traders who were short down here, they got all the cheap stuff, right? This is like when people line up and something's on sale and they buy all the cheap product and then they go flip it on eBay for double the price, right? It's the same concept. There's nothing new here. So we're looking for 91 half. If I was still long, I'd sell one here, right? Like say I was long, what was I long? 87, right? I'd be out here, right? If I had 10 contracts, I'd be long gone. 90, 90 half. Thank you. Goodbye. 2 points, 3 points, 5, 10 contracts. Go to the gym. Does that make sense? Do you guys understand the business reason for that trade? Thanks, Nate. Cool. Yeah, so you're just like when you're shorting a market and you're selling alongside the seller. When you're buying a market, you're buying alongside the big buyers, right? Get in, get out, get paid, go to the beach. Notice we didn't have enough time for the volume point of control to even move down because it's 1,977 contracts here. We haven't even printed 1,000 here. So the price moved all the way up from 85 to 90 without even, if I split this out, 2,300 contracts here, split out J, there's less than 10,000 on that liquidation, right? Sure, but I don't get how you see the short position from the TPO. Ah, that is my interpretation of the TPO, mother truck. Also the fact that, and this is a hard thing to visualize, so I understand what you're saying. Short positions are created when a market trades lower or a stock trades lower and everybody shorts it. See, when M period opened here and liquidated all the way down here yesterday, two things happen. The smart money shorts cover, right? So smart money shorts cover, which means they buy. Dumb money initiates here because they think this is going to happen. And then they get trapped. And they add and they hold and add in the overnight. So when the market gets back down there, right, you'll see all of this responsive buying. Look at all that size. Look at where it came in. Right underneath here. right? Look at where the size is in the second period. You see that? If you split out each half-hour candle, it's not obvious. Once you start looking at it over and over and over again, you're automatically, that's why somebody who has experience will go, oh, they're trapped here, they're trapped there. And most people are like, how the F can you see that? But it's just time. There's nothing in this business that is beyond your level of skill. All it is just a matter of time. Time looking at it and then time executing it. Does that make sense? These aren't single prints. This is what they call excess. Single prints happen in the middle of a profile. Like you'll get a chunk of volume here, a chunk of volume, and then a single row of letters. Excess happens like that's excess. That's excess. These are single prints. It has to be in between, right? No, oh yeah, there it is. There's the bottom, right? Not a problem. You just need more time. That's all it is. If you then that's why I was stalking that area. I was like, aha, right? We took out that M low, we took out the A low, and when we took those lows out, right? What happened? Well, if I'm a short seller, I'm going to be sitting here waiting like a dog for all of this to fall out so I can cover my short, right? I know that if that level gets taken out and that level gets taken out, buyers will have their stops here. Those stops will get executed and some inventory will fall out, right? Like a piñata. You break the low, the candy falls out. You sit there and catch the candy, right? That's what short sellers do. Short sellers will sit and wait at a stop to see whether or not there's, the stop breaks. So you have the B low, the open, all of those places longs yesterday would be using as their stop. So it all fell out really, really conveniently here. And they got to cover, right? Your timing has been off? My timing's always off too, usually, right? You just started trading, right, Nate? I'm not sure what time zone you're in. A lot of times when you first start trading, your timing's going to be off. You're just kind of getting into the rhythm of it. That's why you kind of trade a little small, trade the micro, kind of ease into it, you know? So knowing where the bids are going to be or are likely to be, where the shorts are going to come in and cover, it helps you in two ways. In one way, it helps you because if you're short, say you were short 96 and it got down to 88, 87, you know, okay, I better start covering here, right? I'm seeing other buyers, I better cover before they take all the supply and it goes back to 91, right? Oh, that's number one. You know where to cover. The other thing is, if you're looking for a responsive long, that's where you can initiate. That's okay. You got a whole new quarter coming up, Nate. You can focus. You'll be all right. Getting distracted is really easy. Yesterday, I did an exercise with one of my younger guys where I got him to turn off his cell phone. and give it to his mom so he couldn't get his hands on it. He lasted for 38 minutes. I was very proud of him. It's very easy to get distracted these days, right? He lasted for 38 minutes without putting his phone on, right? When you're trading, you should not have your cell phone on your desk. It should be in another room. It's crazy. It's so easily distracted. And I'm like, what are you doing on that? Are you like waiting for a call from the United Nations or something? Like, he's like, what about if somebody calls? I'm like, who cares? You're trading. It was funny. But it's true. They've got us so programmed with those things. Another look below and fail of 88.5. Man, it's getting really slow again. I'll do a short session tonight, folks, because I'm not going to torture you for too long. That's what I figure I'll do with these sessions because I've been noticing that these YouTube sessions, especially when the market's slow, um, I've been noticing that people just get really, really angry and they start getting really abusive. So we'll, if it's busy, great. But if it's slow, I'll give you guys the breakdown, tell you what to look for, and then get going. Like yesterday, somebody came on the stream and they were like, usually they were normal, and the guy was even in my room for a while. And yesterday he just started cussing me out for no reason, just because I said I like living in Liverpool. And I was like, kind of like, what the hell's going on here? It's been a very frustrating week, and a lot of traders are very frustrated because they're not making money, and it's difficult. And when you deal with retail people, it's kind of like being a bouncer at a nightclub. You never know who's going to come into the door on these YouTube sessions. So it's it's good to kind of take a little bit of a break. Hey, Black Swan, what's going on? How you doing? Yeah, it's a little bit faster lately after the Fed. We still need a really good liquidation, Phil, you know. Yeah, I was thinking about that yesterday. It's like it's one thing to be like, on YouTube and trying to help people out, but sometimes when people aren't making money or they're getting frustrated, you just end up being their. Yeah, the desperation's pretty bad, right, Johnny? Right? You can as a guy who's been a wholesaler my whole life, I can smell the desperation, right? When you talk to people. Um, Especially when you get call, like messages like, "Should I just buy it now? Would it be a good time to buy it?" And I'm like, "No, Jesus, that's, you're not even doing business properly. Just take a break." And then you tell them to take a break and they cuss you out. So it's a little bit of self-preservation never hurt. Still some more for sale. That's good. That's good. We allow all those people who got short yesterday and the day before come in and do some covering. Let's see if that overnight low holds when London opens. So here's your scenario, right? Here are your trades. In 6 minutes when London opens, if London can't take the overnight low, look for rotation higher. If it does take the overnight low, right? If it takes out the overnight low, down here is a bit questionable because we don't know what's lurking down here for bids. So just use these levels. Usually the middle of the zone, if you get a break, is one of the first places that it'll stop. So this 82 half area, right? And then 76 half is down here. So that's where you'd kind of map out if it breaks and it comes down here. Look to those places. There's some volume building out here. Almost 1,000 contracts down here at 87. See how this is just completely not tradable, right? I wouldn't even think about building a position yet, especially to the long side, because I don't see, I see sellers lowering their offer. Nothing to do. It's horrible, but sometimes there's no money to be made, right? But that's just how business is, right? Sometimes in business there's money to be made, sometimes it's slow. You have to wait for your opportunity. And if it doesn't show itself, don't bother trading. I'm probably one of the only people who tell you like to not trade that much. You'll find that if you trade less, you'll make more money because you're not going to take bad trades, you know. And it's nice to relax a little bit. You're not always on edge. So when I see stuff like this, I'm always relaxed. Question, when a size seller stop hitting the bids and raise the offer, how does he behave when getting to competition from track longs? Okay, so say I've got, good question, Mother Truck, thank you. Appreciate that. So say you're a size seller, right? And you started selling here, right? And you knocked it all the way down, right? And you're selling, and then all of a sudden you see some buyers come in and you raise the offer, right? And you're raising and you're raising and you're raising. And then when you get to an area where you start getting competition from other sellers, right? Trapped longs liquidating, not covering, right? So I'm selling, and then I see I can lift price. Here I start getting competition. I immediately will bang it down. Does that make sense? So if I take a market down and I start selling, and then when I start lifting the offer and somebody price competes with me, of course, as soon as somebody jumps in front of me, I punch them in the throat and take out all the bids. Right? That's what that is right there. You always have to front run them. Yeah, you have to jump in front. Always. Otherwise, somebody else steals your customer. Right? So pretend you have a product that's going to go bad. That's what front running is. Exactly. That's a double bottom. So front running, Hermock, how front running comes from the old days where say you and I are sitting next to each other on a trade desk and you get an order from a client to buy 2 million shares of stock and I hear you take that order down and write it down, buy 2 million, blah, 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 with a $5.50 limit. I will go and start buying that stock before you get in there because I know that your order is going to push the price up. Or if you've got a big sell order, that your order is going to push the price down. So I get in there and I sell a little bit or I buy a little bit knowing that you are going to move the market. That's what front running is. It's jumping ahead of the line. Look at this double bottom, right? The product will go bad. Pretend that these ES contracts, after a while you're holding them, they start smelling bad, right? Like bad fruit. Let's see what the guys do. Let's see what the large traders do here. Now we have one tick of excess, which is still a poor low. It's either a double bottom or one tick. It's still a poor low, which is telling me that there is some responsive buying here. Not enough for me to go long. Right? I don't trust it yet. Okay, that's a proper low. It's got two ticks of excess. Exactly. ES contracts are like ripe bananas. You want to get rid of them before they start going bad. And don't worry about, here's the thing. A lot of people worry because they see in trading rooms that people are like, oh, I bought the low and I sold the high and then I got into my private jet and, then went to my private island. Come on, give me a break, right? They're most probably those people, and those people never post their losses. They never tell you when they took a loss, right? They never tell you any of that stuff. So don't worry about it, right? Where do I get my levels from? I've got a video on that actually, Herbach. What I do is you look for a balance zone. So you just look for two-sided trade. So you look at highs and lows, and when you look below that low, you go to that high. So that's what you're looking for here. And then that's a cost basis. Right? Trading rooms, like you'll notice that there's some people in any trading room, and God bless them, I love them. But, they only post their wins. They never post when they get stopped out. They never post when they put a loss. Their trades are always 30, 40 points. And then they disappear, and then they come back. It's just, don't worry about all that stuff, folks. Just focus on your own business, Focus on your own business. Don't worry if somebody said that they, it's just crazy. It's like, I made 300 points today and, and then, I hung out with a bunch of Russian supermodels. It's like, okay, come on, come on. Right? So don't ever pay attention to that. right? Stick to your setup, stick to your way of doing business, right? I do my levels every day. So Hermock, if you came into our trading room at the trading syndicate, right? I do the same thing every day. The first thing I do is I go and look at the inventory where it is. Then I do these 1 minute levels because I use the 1 minute chart to execute. This is this is a map of the city. This is a map of the neighborhood I'm in, right? And then once I map the levels out, I test it with a micro or two to see whether or not my brain is working, right? And then if everything's all go, then I switch to the mini and I trade. I do the same routine every single day, which helps. One thing, it helps keep me disciplined. The other thing it does is it helps me understand when not to trade because that way I only have, well, this helps when your brain isn't always working if you have a routine. Because if you do the same thing every day, your brain will get trained. And you only take trades when the terms and conditions under which you do business present themselves, then you take the trade, right? If those terms and conditions don't present themselves, they don't get your money, right? Like right now, the trades I like are when it looks below and fails, or it looks above and fails. Right now, it's in the middle of this, so meh, not interested. This does two things. It keeps me from trying to trade and then lose money. That's number one. The other thing it does is it relaxes my head because as soon as I see that I don't need to do business, I can put my mind in a relaxed state. And when your mind is in a relaxed state, you will pick up all the little subtleties that 99.999% of people always miss, right? Right. I'm like trading rooms are great. They're great communities. We have a great one, but in every trading room, you're always going to have one or two guys who never have bad trades, who are always making a lot of money. Don't worry about that, right? Just ignore that. Focus on your business, work on your business skills, and you'll be fine. Blue is the cost basis. So how I work this is blue is cost basis. This is 2 times discount zone. This is 4 times discount zone. The green is 2 times profit. That's all it is. So this is where my inventory is priced. Now it's on sale. Real simple. Yeah, there's no rocket science here. London is open, and it's just kind of leaking. So remember I said I have no idea where the bids are gonna come in. So if you're short and the offers, say you're short, right? Say you were short. Actually, I did miss a trade in hindsight, which is always 2020. That's a look above and fail. So should have been short here and holding it on the way down. I missed that. I got Friday brain. Yeah, it's not a numbers thing, right? And remember, Alexander, UK numbers really, the S&P, this is a E-mini, this is a US index, right? So I don't really care, right? It's all inventory and order flow. Right now, inventory is long, and the shorts see opportunity to cover. So they don't care about the good numbers. That's why you never day trade using macro information, right? Because day trading is all about inventory and order flow, right? Market never cares about numbers. It's all about how much inventory do we have? Where is it priced? And are customers coming in or are they running out of the store? If they're running out of the store, we got to chase them out of the store and sell it to them at a discount. Yeah, maybe a look below and fail of 76 half. there's a Japanese Fed meeting. Could be Raj, but who cares right now, brother? I love you, but just don't even look at that. You got to get rid of that Bloomberg channel, man. I know where you find. I saw it too. I was like, you get sucked into it. They got so much stuff on there, right? Right? Yeah. Just I don't even watch that stuff. I haven't watched CNBC or Bloomberg unless we know somebody who's going to be on, like one of our friends. Like if Shayna's on Bloomberg or something like that, we'll watch to see how she does, or if you know somebody we know, right? But I can tell you, it's just noise, right? Really, for day trading, the best thing is to trade in a vacuum, right? So you're super focused on order flow. You're super focused on inventory. Remember, we're still inside yesterday's range. So until we take out yesterday's low down here, where's my yesterday low? Here it is, right? Until we take out yesterday's low, there's really no change. Just we're having a bit of a sale right now, right? So don't buy it, right? I don't even watch the news. The problem with the news, mother truck, now is there is so much news you can't keep up with it, right? And if you're just trading the ES, you will do much better by just watching the chart because the chart's telling you all you need to know. Most people don't realize that the chart's telling you how business is going right at this second, right? The offer's lifting, so they've seen buyers. That's all you need to know. Why? Who cares, right? We'll talk about that later. Offers lifting, don't short it. Offers going down, don't buy it, right? Simple common sense stuff, right? No, no, no. The look below and fail is taken from any one color zone to another, Deeks. And then later on, you can adapt it to different situations, right? It doesn't have to be 4 times discount. It can be from balance to 2 times back up. It can be from 2 times to 4 times back up to 2, right? The chart is the purest form of information. You guys ever heard the term word on the street? Anybody heard that term? Right? The chart tells you the word on the street. It tells you what the real truth is. The chart tells you the truth. People on, yeah, exactly. What's the 411, right? People people on television will lie because they have to push their agenda. Right? If I'm a fund manager and I'm long, I'm not going to go and I'm long a certain stock. I'm going to go and talk the stock up, right? But what if I'm talking the stock up just to get you guys to sucker you guys to buying it while I'm secretly selling it? You ever thought of that? Right? I own a piece, just a total dog poop piece of stock, right? And I got like a position in this thing, right? I made a bad call. Well, I'll go on a TV show and try and sucker all you people into to 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 buying it so I can sell it, right? Create some buying so I can dump it. That's why people always have an agenda when they're telling you things, right? They want you to buy a stock only because they're selling it to you. right? That's how finance works. They don't have your best interest at heart, right? They're thinking about the new Gulf Stream that they have to pay for, right? The chart is the only thing that doesn't lie, right? The chart is the only thing that tells you the transactions. Right now, you know there's a seller at 85 half. That is truth, right? Because if there wasn't a seller at 85 half, we'd be trading at 87, right? Yeah, these guys are always talking their book, right? They're always trying to buy it, talk you into buying some crappy stock because they're long, or they either that, or they've, financed it at 50 cents and it's trading at $10. So they're trying to offload it onto you, right? The chart is the only pure reality, right? Everything else is agenda, right? Everything else is agenda. Oh, just trust the chart. Trust the chart, my friends. It'll serve you well. Yeah, the chart is what's happening right now. Hmm. Well, I think it's going to sit and go sideways here for a bit. Further liquidation? Maybe. So we've got our inventories here from yesterday and here from the overnight. Just let it drip down, right? We're just going to let it drip dry, let the shorts come in and do their covering here. Let's see what the next course of business is. But I think I'm going to wrap it up here because it's just kind of going sideways. And unless anybody has any questions, I will let you folks go a little early. Go enjoy the day. We'll see you at 9 a.m. Eastern Time for our Globex session. Thanks, everyone, once again. Appreciate you guys. Trade safe out there. Come visit us at tradingsyndicate.org. We'll teach you how to trade with some common sense. Help you navigate this insane business so you can actually make a living. And I'm starting up another mentoring class, so anybody who's interested in one-on-one mentoring, reach out. I'm available. And I will see you all later today. Thank you so much. Please stay out of trouble. Keep your fingers and hands inside the vehicle at all times. Thanks, everyone. I gotta go get some exercise. I'll see you in a little bit. Bye for now.